Hi everyone, welcome back to Difference Frames the World, a channel that offers a unique perspective. Please subscribe and turn on notifications so you will not miss DFTW's daily uploads. Today we talk about the trade conflict between China and the United States when both sides reached a preliminary consensus on the trade framework this Sunday. In the past several years, we have heard enough about the trade war between the United States and China, especially after Donald Trump instructed Canada to arrest Huawei's princess, Meng Wanzhou, in December 2018 during his first presidency. We're now in a moment where Beijing and Washington say they've reached a framework deal to calm things down. But what does that mean? Is it real? And will it change much of our daily life? Let us start with a brief introduction of the conflict and the framework deal. For years, the US and China have been ratcheting up trade conflict, imposing huge tariffs, tightening export controls, and issuing threats at each other. Then in mid-2025, they announced they'd reached an agreement in principle, a framework to manage and reduce tensions. Under that framework, China agreed to pause or ease some export controls on rare earths that are vital for everything from electric cars to smartphones and defense gear. The US has toned down or delayed imposing new extreme tariffs on Chinese imports. They also discussed a final deal on TikTok operations in the US and China purchasing America's soybeans. Both sides said they would work on the details, how exactly they'll enforce parts of the deal, what goods are covered, how export licenses will work, etc. It is worth noting that this is not yet a fully signed ironclad deal. It's a framework, kind of a roadmap or stepping stone, rather than the end point. The US and China are like two neighbors who have been yelling and slamming doors, and now they agree to sit down and nip the worst of it in the bud by saying, okay, no more door slamming for now, let's figure out how to fix the plumbing and the fence without another fight. It doesn't mean all the problems are solved, but the escalation is being paused. Why is this a big deal then? Here are three big reasons it matters. First, supply chains and critical materials. The rare earths issue is central. China produces a large share of the world's rare earths and refines over 90% of the world's market. The US and many companies depend on that supply for manufacturing high-tech goods, from EVs to defense systems. For instance, the US military just ordered 296 F-35 stealth fighters, a huge deal for the US military-industrial complex. Still, without China's rare earths, the delivery will be delayed for at least 5 years, if not 10. If China had followed through on tighter export controls, it could have caused major disruptions. So if you're someone working in tech or manufacturing, or if you buy things that rely on high-tech components, this reduces the risk of a sudden supply shock. Second, tariffs and cost pressures. When one country slaps big tariffs on another's goods, it often means higher costs for manufacturers, higher prices for consumers, or disruptions in what factories produce and where they produce it. The announcement of the deal to temporarily reduce or hold tariffs is a relief in many quarters. For anyone who buys imported goods or works for a company that depends on global supply chains, this is a positive sign. Third, geopolitical and business confidence signals. Beyond just economics, this framework signals that both governments believe the escalation has gone far enough. They're stepping back for now. That tends to calm investor nerves, business planning, and global markets. It also means we may see fewer surprises or wild swings in trade policy in the near future. However, it is not a miracle cure. However optimistic this sounds, there are important caveats. No deal is perfect, particularly one described as a framework. Here are some reasons for caution. Vague details, big gaps. The framework sets out principles, but many of the specifics are still missing. Which goods? Which export license categories? How will enforcement work? What happens if one side doesn't comply? These questions remain. Structural issues remain unaddressed. Some of the complaints the US has had for years include China's large trade surplus, state-owned enterprises receiving subsidies, forced technology transfers, and IP theft. Frameworks often focus on the low-hanging fruit, such as tariffs and export controls, rather than on deep structural change. Whether this deal will tackle those issues is unclear. Implementation risk is high. If one side thinks it gave away more than it received or faces domestic pressure, it might renege or pay lip service. Supply chain reengineering isn't instant. Many companies have already started diversifying away from China with the so-called China Plus One strategy after the earlier rounds of tariffs. Even if trade improves, returning to the old normal is costly and slow. Broader competition remains. Trade is just one part of the US-China relationship. Technology, military strategy, alliances, intellectual property, and climate policy all loom large. This framework doesn't mean the rivalry is over. Instead, it helps manage only one dimension. In short, this framework is useful, but it's merely a good step, not a grand resolution. The US, under the previous administration of Donald Trump, imposed large tariffs on Chinese goods, citing unfair trade practices, forced technology transfer, and other concerns, and China retaliated in kind. In January 2020, a partial deal was struck. China committed to buying more US goods, and the US held off on some tariffs, but many of the deeper structural issues remained unresolved or slipped in implementation. Trade tensions rekindled in 2025 when Donald Trump returned to the White House. Tariff threats rose, export controls, especially on rare earths and tech, became sharper, and supply chains were again under strain. For example, China cut some rare earth exports. The US threatened massive tariffs. In April 2025, the tariff rate skyrocketed to 145%, and trade between the two nations effectively halted. In May 2025, in Geneva, the US and China agreed to a 90-day pause rollback of steep tariffs. Then, in June in London, 2 days of intense talks produced the framework to implement the Geneva Agreement and go further. So the current framework is part of a gradual process: escalation, pause, negotiation, partial deal. Whether it evolves into a full deal is the next phase. Let's drill down into how this might affect different groups and sectors. For manufacturers and tech companies, if rare earths and other critical materials flow more freely, it may ease cost pressures and supply risks. For companies making phones, EVs, wind turbines, and defense gear, that's big. For consumers, if tariffs stay lower or import costs don't surge, fewer price spikes on imported goods might occur, along with fewer disruptions in product availability. It is also a relief for agriculture and exporters. U.S. farmers, for example, have suffered when China cut purchases of U.S. soybeans and other goods. If China recommits to buying more U.S. agriculture, that could be a win for that sector. A calmer trade environment encourages more planning, less hedging against the worst-case scenario, and maybe more investment in supply chains and global operations. However, when the US and China reach a final deal, there might be a sudden collapse of the US stock market, which has long been anticipated. Even if the framework is implemented, the time lag for supply chains to adjust and for agreements to be turned into contracts is months to years. We're not likely to see, in the immediate term, China radically change its entire model of industrial subsidies or state company dominance, nor will the US completely abandon its tech export controls. These are big, entrenched issues. Many companies began diversifying away from China to mitigate risk, and going back isn't simply a matter of flipping a switch. So even if trade risk drops, the broader shift in global supply chain architecture will remain. Geopolitical competition between the two superpowers remains a lasting issue. It is unclear whether the US Congress and China's relevant bodies will approve or implement the framework. It may not be a big problem for Chinese policymakers. Still, the United States of America is not as united as its name suggests, and the Trump administration has a long way to go before convincing Capitol Hill to give the green light. Despite uncertainties, the framework matters globally. The US and China are the two largest economies in the world. What they do affects everyone. Trade war escalation had real risks of hurting global growth via disrupted supply chains, higher costs, and reduced investment. A pause helps stave off the worst. As technology, energy, and defense become more important, control of key inputs such as rare earths and semiconductors matters not just for the US and China, but for global manufacturing. Yes, this is a positive step. The fact that both sides paused escalation, sat down, and produced a framework means they are serious about reducing short-term risk. That's meaningful. Still, this is not transformational, at least not yet. Until the details are finalized, implemented, and verified, it remains a framework, not a full deal. It gives us breathing room, which may be just what businesses and markets need, but it's not necessarily the end of the trade war or the rivalry. We're in a moment of moderation rather than resolution. The world has watched this US-China trade conflict escalate many times and settle into pauses. This time, what is promising is the inclusion of strategic materials in the framework, suggesting the conversation is shifting from just tariffs to supply chain and technology security. That said, because many of the deep structural issues remain, and because many businesses have already diversified supply chains, the real gains may be incremental rather than dramatic. For ordinary people, fewer shocks are good. For companies, more clarity is helpful for nations. Time to build deeper trust and stronger mechanisms. But we are not expecting fireworks. This is more of a gradual behind-the-scenes fix than a blockbuster trade deal.